Joe is the president of the GARP Risk Institute, as I said earlier in my introduction. So GARP, for those of you who are not familiar, is the Global Association of Risk Professionals. I've had a long-standing association with GARP. I'm on the advisory committee for the Sustainability and Climate Risk Certificate, the SCR for short, which is their professional training certification, which has been going from strength to strength over the past 5 years or so, Joe?
About 3.
About 3, yeah. Time flies.
4.
And so, as I said, a strong association with GARP, and it's great to welcome Joe back to Imperial. For those of you who were here in May at the book launch for Climate Risks, which was written by our honorary fellow, research fellow Bob Buer, Joe was also on the panel for that. So she's a good friend to Imperial, and especially as she's stepped in at short notice to do this after, regrettably, Simon Sharp had to pull out because of health reasons, which was a pity, and we wish Simon a speedy recovery. But it's great to have Joe here nonetheless. We're going to try and stick to the general topic that Simon was going to talk about, which is the energy transition. But I'm sure Joe will come at it from a somewhat different angle. We'll wait and see what she has to say. But before we go into that topic, Joe, maybe I could just ask you, first of all, can you say a little bit more about GARP and the Risk Institute and what exactly you do there?
Sure, yeah. Well, great to be here, and hope you can all hear me. Apologies for not being Simon Sharp, but I have bought his book, but I haven't read it all. And I was thinking yesterday maybe I should read it all, and then I'd be as informed as he is. But so GARP is a US-based not-for-profit that specialises in risk education. And we're probably best known for the FRM, the Financial Risk Manager certification. But we introduced the Sustainability and Climate Risk Certificate a few years back as well. Now, I joined GARP about 5.5 years ago, and actually, Mike, you said that I'd had a 20-year career. Actually, I've had a over 30-year career, so I'm not sure if that makes me 10 years younger than I thought, but that's great. And I joined with a blank canvas to set up this thought leadership arm, and I was just told, look at whatever areas of risk you feel are kind of underserved, areas where you think that risk managers maybe don't understand enough about that particular area, and it needs a bit more focus. So it soon became clear to me that climate change was one of those areas which was going to become increasingly important, increasingly relevant, and certainly has risen up the supervisory agenda over that time quite considerably. So now the Risk Institute only focuses on climate risk and sustainability in nature. So it's really honed in on those particular areas. And the sorts of things we do are, as any kind of thought leadership arm, we've got articles, webcasts. I host a podcast every 3 weeks. And we do some white papers and some research on what financial institutions are doing in terms of their climate risk or their nature risk management.
Great, thanks, Joe. And I recommend those of you who are into risk management to follow what GARP's doing. It's excellent work there. So let's turn to matters at hand, and it'd be remiss for me not to start off with looking at the current events that we've seen happening over the past few days around the turmoil on net zero policies, not just here in the UK, I should add, but elsewhere across the continent and across the world. There seems to be this general trend, which has been probably bubbling for some time, in terms of backsliding or reneging on net zero policies and policies for the transition. These political pressures are getting stronger and stronger, and it'll be interesting to hear what you think, Joe. Are political pressures going to be the death knell for transition to net zero?
Well, I certainly hope not, and nor should they be, because let's face it, we all know the destination. We all know we have to get to net zero. It's just a matter of when. Now, politics is always going to get in the way, I'm afraid. I mean, if economists rule the world, although am an economist. I actually wouldn't want economists to rule the world. But if we were, we would have a global carbon tax, and we'd have been, introducing policies based on pure economics, and we would be transitioning without this kind of backsliding. The thing is, we've got an election, and it's quite a cynical ploy, isn't it, to be able to speak to households and say that this is going to be too expensive, and but it's not going to do us any good in the long run, because we know where we need to get to, and actually what firms and what the financial system wants is policy certainty. And we know that the sooner we transition, the cheaper it's going to be. So actually, I think this kind of backsliding could actually not be good politically. I think people can probably see through it, and it's probably going to end up being more costly.
Yeah, and it often seems to be dressed up, if I can use that term, around the narrative of honesty. So, the Prime Minister is being honest with the electorate about the costs of the transition. Hence, that seems to be a justification for, turning back the dial and slowing the clock. But is honesty really the best policy in this case?
Well, I mean, shameless plug here, but my last podcast I did was with somebody, and we talked about the new oil and gas licenses that have just been announced. And it was Jane Stevenson, and she made the point, because she used to work in oil and gas, so she did know what she was talking about, that between a license being granted and actually getting fossil fuels out of the ground, it's about 6 years, that lag, because you've got to go through various prospecting and building the infrastructure and that sort of thing. So if you think, in 6 years' time, 2029, we will be getting the oil out of these wells, well, at that stage, we're nearly at 2030. We should have been cutting our emissions by 43%, and actually we'd made a commitment, the government made a commitment to cut emissions by 78% by 2035. So, net zero doesn't mean on the 31st of December 2049, you cut it to zero. There's a glide path. So I don't think he's being remotely honest about this, actually. And the problem is, we had good leadership in the UK in the run-up to COP26. It was all very positive, and we were seen as kind of global leaders. And what I worry about this is we're just kind of losing it overnight. And for what benefit? I honestly don't understand it at all. So I don't believe that this is a policy of being honest, actually. I think it's really quite cynical and dishonest.
Right, well, call it as it is. It's dishonest and cynical. But what about the implications for the financial sector? I mean, financial institutions have been slowly but surely transitioning themselves in the face of regulation and supervisory changes. Is the current political uncertainty a risk to that momentum continuing, do you think?
Well, I suspect most financial institutions were expecting a bit of political backsliding. I mean, they're quite realistic, to be honest. They know what happens with elections and electoral cycles. And I think, the thing is, it's not just the UK, it's the entire world here. The UK is a tiny part of it. And you do see this kind of backsliding in other countries as well. And I think they've just kind of got to get used to it. I think if Simon Sharp was here, I don't know, but I suspect he would tell you that actually this transition is happening because of exponential growth, and it's probably happening faster than we realise. That's what the sense I get. That
is
actually,
it 5 times faster?
I don't know if it's 5 times faster, actually. It's probably not as fast. Yeah, I don't know if it's as fast as it needs to be, but it is picking up. And the thing with exponential growth is it is quite hard to get our heads around it. I mean, you saw it in COVID. People couldn't quite work out how COVID was spreading so rapidly. Well, that's what's happening in the energy transition. And one thing when we were chatting yesterday, in financial institutions, it started off very much as a risk conversation. It started off with the CROs and the risk departments thinking about how to model the risks. And what I've seen over the last 4 years or so is more of a shift towards commercial opportunities. And so maybe the ownership of climate risk management is not just in what we call the second line of defence in the rest department, it's actually moving into the front line because there's money to be made. And, I don't mean to be cynical, but if banks and insurance companies can make money, then the transition will happen because the economics will dictate it. And so they'll get round the political instability because the economics is going to dominate.
Yeah. But, I mean, it's not really being cynical because essentially these are businesses after all, and they're in it to basically to make a profit for their shareholders. But looking at the other side of the coin, the risk exposure, because we were chatting yesterday and you said there's still banks and financial institutions taking a bet that the transition's not going to happen, or it will happen more slowly than originally thought. And hence, the investment in fossil fuels hasn't really stopped, has it? We're still seeing that investment flow, which is really causing very, very big issues. What about the risk of that happening? What about the risk of continued investment in fossil fuels?
Yeah, well, this is why you've got a lot of supervisors concerned about it from a financial stability perspective, because, as you say, if there's an awful lot of investment in stranded assets, then we get this climate Minsky moment, and then suddenly, the banks have got enormous problems on their books. So, supervisors are learning, and they are making the banks do scenario analysis exercises. Now, there is some controversy about some of these scenarios. Are they extreme enough? But this is a maturing area, and I think you'll find that there's quite an active debate about whether financial firms need to hold more capital against their climate risks, or actual capital against their climate risks, and this is going to be a very live debate. I mean, it's a bit like whenever there's a bubble, or the stock markets have gone up a lot. When do you get out? And that's the thing with fossil fuels. When do you get out? Because at the moment they are still making a lot of money, but they won't be all the time. And we know that we can't carry on with the fossil fuels. So it's a risk. It's a risk. Are they pricing that risk appropriately? Are they provisioning against it in case there are losses? I don't know. I do know that a lot of financial firms say that they're finding it very difficult to price the risk. And so that's why you'll find networks like the NGFS, the Network for Greening the Financial System, that's all the central banks and supervisors, they are concerned about the financial stability implications of the continued funding of fossil fuel, and also just general kind of physical risk as well. So it is a risk, and I don't know whether those financial firms are pricing it appropriately. I wouldn't like to say.
Yeah, and there certainly seems to be a lot of scrutiny around in terms of what the financial firms are doing in terms of their investments. In fact, I heard recently that there's more schemes tracking and scrutinising financial firms' transition plans than there are transition plans themselves. So, I mean, do you think this is sort of like the balance has basically got wrong, or what's your view on this? Has it gone too far the other way?
What, just the
whole sort of
ecosystem
of scrutiny and activism and NGO interventions?
No, I don't think it's gone too far at all. I think, given what's at stake, I mean, it's only the future of civilization, isn't it? It's not something that you can lightly dismiss. Yeah. So, no, I say bring it on and keep scrutinising them, actually, because, the best friend for risk management is transparency, actually, so that you can understand the risks you're taking, and you can, appropriately hedge those risks, price them. So the more we know about what's going on, the better.
Yeah, sure. So moving from the sort of role of activists and NGOs and other organisations that scrutinise, is also an important role, we would argue, of course, for academia to input into this. So the role of science, the role of technology innovation, the role of entrepreneurship. How do you see that fitting in with the transition?
Oh, I think the role of academics is crucial, although I obviously would say that, wouldn't I, here? But no, I do, because actually, you've got that clarity of thought, and you can be dispassionate, and you can use data and analytics to actually help, whatever it is, whether it's in terms of understanding the risks or the opportunities, thinking about financial structures and how they need to be changed, So no, I think academics are absolutely critical in all this.
Right. And also, you mentioned climate stress testing, and we've just gone through a massive exercise here in the UK with a climate survey, CBES, the Climate Biennial Exploratory Scenarios, for those of you that know what CBES stands for. So, and we were involved together with colleagues at the Centre for Greening of Finance and Investment, CGFI, in looking at the CBES exercise, which was run by the Bank of England together with others like CRAF. And I know that you were involved in that as well, Joe. Now that we've learnt, hopefully, something from last CBES exercise, where do you think it goes from here, and where do you see the next big challenge?
No, that's great. And the report is really worth a read if you're interested in climate stress testing. They had a lot of recommendations for how to improve things, including things like peer review of scenarios. So, the scenario exercise will only be as good as the scenario. And if that's not capturing all the risks, then, that's an area for improvement. But I think probably the next big area that we're seeing is nature. And incorporating nature-related risks into the analysis. So I'm sure many of you here have been thinking about that as well. But you see it in policy circles, how many policymakers sort of started off with climate risk because it was almost simpler. You could think about 1 ton of carbon emitted anywhere in the world and it will affect the atmosphere in that way. Whereas things like nature and biodiversity, they're much more local, they're much more complex to measure. But increasingly that's coming together, and you see it also in science as well. So you have the IPCC set up first to deal with the climate, and then you've got IPBES set up after. But those two bodies are coming together as well, and there was a workshop where they both sort of thought about the interconnections. And now you've got TNFD fast on the heels of TCFD. So I think nature and understanding nature-related risks and how to measure and manage those risks is probably the next big thing for them.
Good. Before Joe leaves us, well, not leaves us altogether, but ends this conversation, wanted to open up, see if there's any questions for her from the audience. Yes, one just here. I think there's a microphone coming your way. There we go. Thank you. If you could say who you are as well, that'd be helpful. Thank you.
Michelle Horsfield. I work for a Japanese headquartered bank called SMBC. In so many of the financial institutions, risk is such a mainstay of how they operate. For either of you, actually, could you comment on how we can overcome that sort of hesitancy to look at new opportunities? I'm thinking like hydrogen or ammonia, where the risks are really not understood, and yet we kind of need to get into those systems. I'd just be interested in your views, your comments on that.
Joe, do you want to tackle that one?
Yeah, I mean, it's a great question, and I think when you think about the financial system, it's not always the banks that are going to be doing the most innovative lending, to be honest. I think there are different parts of the financial system that are better set up to take those risks, whereas the banks are better when the risks are better understood and it becomes more mainstream, which is a shame in a way, but that's, I think, the nature of it. I did another podcast, oh my God, I'm sorry, I just keep plugging that podcast, but with Bruce Usher about investing in an era of climate change. And he was talking about the different strategies we've got for dealing with this. And so one of the biggest ways to have impact is impact first investing, where actually you can expect to receive a below market return because what you're after is impact. Now that's an area that's very difficult for the banks to get into. But it's not to say that you can't, like once something becomes a bit more mainstream, then you can plough in. But I think those real cutting edge technologies, that is difficult for a bank, from my experience.
Yeah. Now, I would just add a comment that from my experience here at Imperial, it's been very encouraging to see some of the big financial institutions sort of looking at new technologies, looking at the development from a scientific technological sort of life cycle perspective, and not necessarily jumping in and investing, but just being ready for when they actually get to the next stage, so they're not caught cold. They've already got a head start. So I suppose I would say this, wouldn't I? But basically, start looking at these technologies early, with low level of investment perhaps, but be ready to jump in when things get going. And you can use the example of offshore wind to show how that can actually bear fruit. There's a question here.
Thank you, Michael. Thank you, Joe. I just want to pick up on your nature comments, which resonate tremendously. My name's Rob Appleby, farmer, financier, and conservationist. Do you see a future where nature is measured a bit like inflation, which is also nuanced, can be local, and do you see a point where we can actually point to a number which equals biodiversity?
Before you answer that, I'd just like to say that our next panel and speaker will be talking about nature, finance and investment. So maybe
they can answer it then.
but no, they'll certainly answer it, but just bear that in mind. So we'll go into it in more depth.
I mean, there's an awful lot of work going on in the statistical world to develop environmental accounting and everything. So I think it can be measured. And I suspect with, the growth of AI, satellite data, all these digital tools, yes, and eventually we will be able to measure it. I don't know whether it could be summarised in one number. Maybe it could. I mean, GDP is one number. There's a huge amount of complexity underneath that. But, I know about there's tools being developed where you can use a smartphone and you can take a picture of a forest and it can start telling you information about that forest. So I don't know if we really understand or can even imagine how the world's going to change in the next 5 to 10 years, actually, from a kind of data perspective. I don't know. What do you think? Am I allowed to ask him that?
No, of course, yeah. Give me 2 minutes.
I'm on the next panel.
We'll soon find out what he thinks.
I think, but I may not have an answer.
Yeah. We've got time for one more question for Joe before we move on to the next. So, yes, over here.
Yeah, hi.
Mike's
Joe, I don't know much about GARP, but I guess I am interested in how you see your members or the people that you certify. What do you view as their role in terms of pushing next? Are they leaders, followers, a bit of both?
We have we've only been going with the certificate for a few years now, but what we're seeing is some banks, for example, are putting whole cohorts through it now because they want their staff to have a baseline knowledge so they can talk to each other, because the problem is that sometimes you've only got a pocket of few people who actually know anything about this and they work in the sustainability team and it's not in the risk management team. We're encouraging them to be leaders. That's what we want. We want them to go out and we want them to spread the word. And typically what you find with people interested in climate and sustainability is it gets under their skin and they're just passionate about it in a way that maybe they're not as passionate about market risk, or even though market risk is very interesting. But climate, there's a lot at stake and it becomes slightly all-consuming and typically they become real advocates for it, actually. So it's great to see.
Good.
Thank you. Good. With that, I would just like to say thanks once again to Joan. She may not be Simon Sharp, but she certainly is very sharp. So, thank you very much.